The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Hi everyone, this is Basil Chapman sitting in for the one and only Larry Pesavento. Do my best here to go through all these different markets as Larry does. And good morning, everyone in the den there. Yes, hi, Marshall. So look, this is a fascinating period because we've had such a diverse intra-market series of moves where you've got a Boeing pushing the Dow by itself to new all-time highs, not by itself, pretty much by itself, but percentage-wise because of its weighting. And at the same time, you've got home builders going down, 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 down. So let's look at this market. The E-mini right now is up 10.75 at 2939.25. It looks very much like the S&P would like to catch up to the Dow. Dow made an all-time high yesterday. The E-mini is at 2939 and 2947 was the previous peak, and there was a pullback, sharp pullback. I use moving averages because Larry doesn't. He uses Fibonacci as well as Gartley and butterflies. So what we're looking at here is these cup formations. Very often they have the same effect as a butterfly, but let's just separate that. What I'm looking at is the moving average convergence divergence. The MACD and the daily chart needs to cross positive. If it crosses positive, that'll help the E-mini, the S&P E-mini, to get to the 2947s. It's still it's 8 points below that right now, so it's got a way to go. But my weekly chart right here in the middle, so it's daily on the left, weekly in the middle, monthly on the right, and here's the 120-minute chart. It broke the 2938s that I say to subscribers to my opening call daily newsletter. I say that's going to be resistance. Once it takes it out, and if it can hold there, and if by 12:30 this afternoon Eastern time, so that's 3 hours after the market opens, if the E-mini is holding to a +9 or more, that's going to be very good action. If it gives back a chunk of the gains, not so good, because then it's struggling to make an all-time high. I'll show you if we look at the SPX. This is the cash index, the S&P. Look at the S&P. It really is lagging quite a bit. And yet there's not much to go to 2940.41, the all-time high of the 21st of September. And if you put it into context of these cup formations, like a stair-step move, pops up and then takes a break, and then pops up and takes a break, this is going to be very important because intraday, today, if we go above 2937.06, and that's 14 points above where it closed, that's going to suggest that, yes, there's a real good chance that we could get to this potential. Now, could it be a double top? This is treated as a price move rather than talk about the implications. 2940.42 goes to a new leg higher, and that starts leg D in the weekly chart of the S&P, and that's going to be very important because the technicals are still strong. Let's go to the NQ, because I'll do the futures because most of the time Larry's talking futures. NQ trading at 7686 is up 33 points, had a high, all-time high at a peak D in the Chapman wave. Oh, what does that mean? For those of you who are not used to my work, it's a very simple concept discovered years ago when I used to hand chart, that if you can go to the fourth highest peak, I alphabetize them on the way up with uppercase letters. First peak is called peak A, second is called peak B, third is called peak C, fourth is called peak D, and it can go even to E, F, and G. It cannot go to an H. There is no H. You have to recycle, do other things. But it's at this fourth highest peak that other things can happen. That's really the objective, is to get you to D in different time frames, and then other things can happen. Here we are at D. We'll see if other things can happen. If the NQ breaks 7614, the 14-period key support in the next week, that's going to be quite negative. And if it breaks to an all-time high above the high of, that was on the 1st of October, that was Monday, that would be 7728.75. That's going to be very good, and it increases the strength, which is starting to lag in the weekly chart. So this is going to be very important. Monthly chart in all time frames for the in all of the different key indices are still very, very good, all those monthly charts. So the NQ, the Dow, the S&P. Now let's do this. I want you to go to gold, just to show you that gold had a big move up. That was a Goldman Sachs, didn't have gold in the name, Goldman Sachs for nothing. So they gave a recommendation on gold. I'm wondering if they weren't getting out of positions because that was a huge move. But wait a minute, gold spirals from the close on the 1st, on Monday, 1191.70. And wait a minute, suddenly out of the blue, for no fundamental reason, gold is trading at 12.30 intraday yesterday. So I looked at this and I said, wait a minute. The dollar, which for subscribers, we've been long since the 6th of April at 90.07 via the UUP. Dollar was holding beautifully. It did a particular pattern that I look at in the cup formation, left side, right side price time match. 95.74 was the gold. It hit right at 95.74, pulled back a little bit. Nice trading today. It's up 10 cents regardless of what gold was doing. I don't want to go into this pattern here. It's called the Chapman wave stalk leg formation in the weekly. Once the beak is completed, there's a very big move to the upside, and then you're on your own. Well, we've just had that, and now we're on our own in the dollar. So we'll see. This is peak A. Is it going to go to a B, C, and D, or is it going to fail and go under 95? A close under 95 says, uh-oh, a little problem here for the dollar. Holding as it is right now. And the reason why I'm talking about gold, why it's a mystery is, look, EUR, USD, they don't go exactly together, but very often where gold is going, the euro is going to go, at least in the shorter term. And the euro did nothing yesterday. In fact, it had a horrible candle, and today tried to rally and it's fading. It's at 1.153, and the weekly chart is not good at all. And if you look at the USD JPY, that's the yen. We just looked at the euro. Now we're looking at the yen. Yen went in the Chapman wave peak E, holding very nicely, and the yen, not always, but for quite some time, has really worked kind of together with the dollar. Now, I'm not saying there's a direct relationship. I'm just saying it happens to have happened for a while, and it's happening here as well. The yen, US dollar, Japanese yen currency pair. Look at this monthly chart. It breaks down from this peak F in the Chapman wave right there back in November, was it? Oh, June of 2015, up in the 124 area, and it comes down, hits a couple of lower peaks, makes a trend line, and now for the second month is trading nicely above that trend line, and that says that the 200-period exponential moving average of 109, and it's now at 113.83, up 15 cents. That says it's trying to break away from the magnet of that 200-period moving average and push higher. That's very good. The MACD is good. Stochastic's improving a lot. I like the way the yen is acting here, and I love the way the dollar's acted after it got to just about 97, pulls back, and now it's coming back. I happen to like the dollar longer term. So we'll be right back. We'll talk about crude oil as soon as we can return. Crude oil trading down. Whoa, can you believe I'm saying down? Hasn't been down for a while. Down a full 8 cents. No, it's 9 cents. And 75.50. Basil Chapman, the host of the Tiger Technicians Hour, sitting for Larry, Pennsylvania. My pleasure to be here. Great week to see with this hour.
Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. Monday, September 24th, TFNN is launching a new updated version of our website. You can still visit us at the same TFNN.com URL, and starting Monday, you'll be able to experience the new and improved TFNN website. If you're a current subscriber, don't worry, your subscription will be automatically transferred. The new TFNN.com will allow much easier access to all your account and subscription information. Get ready for the new TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Forgot about the Mozart Overture right there. One that I once conducted when I was a professional music years and years ago. Okay, peak D in the gold 120-minute chart. A little double top there right at 12.3. And pulling back just a little bit here. In fact, it's up 1.1, but it's pulling back from that high that was made. I'm going to be watching this very closely because if there's kind of a very slow pullback here, and all of a sudden gold is trading under 12.01, and the dollar is actually pushed even higher, let me see. Yeah, that would indicate that was a false breakout to the upside yesterday. So I'm going to be watching this very closely. Now, looking at the crude oil here in the Chapman wave has made a peak E in the 120-minute chart and is also just pulling back. This is different. Why? Because I've got it as a peak C in the daily chart, recycled high after that peak E right there at on the 4th of September at 71.17, pulls back, starts a brand new look. All you do is you count the peaks. Peak A was right there on the 12th at 71.03, pulls back. Once it goes to 71.04, 1 penny higher, it starts a new leg up, and that's called a floating ladder, because until it makes a peak, the ladder keeps going higher. And here I had an alternate count because it looked, because of the MACD, I wasn't sure if it would keep going, an alternate count, either a brand new leg B or an old peak F, but it kept going higher. It made a peak right there on the 25th at 72.78, pulls back just one day, starts moving higher, breaks that by 1 penny, and crude oil goes to peak C. If there's no new high today, new recovery high today, above 75.91, it makes a peak. And that says, because the MACD, see how strong the MACD is? See the way it deflected off the 9-period differential, I call it the fast-moving average. The green one went above the slow-moving average, or 26-period moving average, and just touched it and moved up, touched it and moved up, and then broke to the upside. Stochastic above 80% is good, above 90 is very good, at 92.37 right now. It is very good on balance volume. The little blue line is pulling back. with the price, so we'll see what happens. But I suspect we will go to a D, and then maybe we have a little timeout in crude oil. We'll watch it closely. And the weekly chart is still very strong. Here again, I've got an alternate count F/B, but the MACD crossed positive. That's good. And stochastic is not great. It's at 75%. It's good, but I prefer over 80%. And look at this monthly chart. When you look at it in the context of what happened back in 2008, of course, this gets smoothed out, but let's just say the high of July of 2008, in this case is 214, comes down to 39.19. I wonder if it's still there, because this gets smoothed out. 38.32, I've got 39.19, and now it's running, but it's not running that great. Oh, it sounds fantastic. Crude oil at $75. Hey, it was over $100. It was once over $200. So, yeah, this is a big move, but we've managed to work through these things before. Okay, next thing I want you to look at is the TLT. So the TLT is the Lehman Treasury Bond ETF, iShare, trading right now at 116.31. Look how many times it's been. I love this. I think this is also why Larry loves doing technical analysis. All of us who do technical analysis. Look at this. The TLT, which is really bonds, right? It comes down to 116.51 in February, the week of February the 23rd this year. Has a good bounce towards the 200-period moving average. It gets repelled, and it comes down, and it goes to 116.09 the week of the 18th of May. And then it can't stand being down in the 116s. It bounces back, and it actually tests and breaks above. For 2 weeks, it goes above the 200-period moving average. The orange line right there, can't stand it, comes back down. And what does it do? It goes down to this 100 twice now in 3 weeks. It's gone into the 116s. We're at 116.31 right now. A close under 116 would start to say that monthly chart is beginning to fail. And I'm going to show you something here. I love doing this. Look at this. This is the TNX is probably the 10-year is the most important in terms of what is geared towards that particular yield. And that yield has broken decisively. It hasn't gone to a leg D in the monthly, but look at this. I'm going to squeeze this closed. Yeah, we get the squeeze. Look at this, September of 1981, a major high in yields. It gets smoothed out, but let's just call it for what it is right now, and it's called 158.40. Let's call it 158, right? Whatever it was, the September 81 major high was the high. The price gets changed because it gets smoothed out. Wait a minute. It pulls back, and it goes to a low back in, this is the October of 1986, and it rallies to the October 1987 crash, and then yields start to come down in this channel. And this channel from 1987 is the high. It comes all the way back down. Oh, we have a bunch of people. I'm sorry. We've got people on the line. I didn't even look down. I'm going to go to Bill in Worcester. Bill, how are you?
Yeah, hi, Basil.
How are you doing?
Okay. I was listening to Larry's show, and he was talking about the grains getting a bit bullish over the last few days.
Yes.
And I was watching, I know you probably know the ETF, I forget what ETF it is, but I was watching the stock Bungie, BG.
Oh, okay.
I saw it move up. It went up from 60, 62, 64, 68.
So can you give me 1 second? Yeah, I just wanted to say corn is moving in leg B at 16.29, and this is the corn ETN I never remember what this is. Teucrium. That's a Teucrium corn fund. So that had a peak D in the weekly chart way back earlier this year in the 1850s, plummets down to the 1540s, and trading at 1624. Monthly chart does not look good, but you want to look at BG, which is Bungie. Wow, I've not looked at Bungie in a long time. Bungie is trading at 69.66. Do you have a position in Bungie?
Well, I had one at 62. I sold at 66. And I want to get back in again.
Okay, so let me just show you something. So this is a peak A, peak B, peak C, peak D. Okay, right at the 200-period moving average, it went in a leg D to that. It pulled back sharply 2 days ago. Yesterday it had a lovely green candle. The MACD is good, stochastic's good. The weekly chart is in leg B. Okay, now you were in at 62, you got out of 66. You want to get back in. This is a tough call because the 200-period moving average should produce a choppy. It's not to say it won't go up, but I wouldn't be surprised if between 69.60, there's resistance going towards 70, and there's tremendous support between 67.50 and 66.80, kind of where you got out. Now, what do? You know what? Do you ever use options?
Yeah, I do. But for this one, I don't want to use options because if you look way back in the chart about 6 months ago, there was some rumors about Glencore buying it, and this thing went up to 80.
Oh, hold on. We've got a break coming. Can you hold on through the break?
Sure.
Great. I'll be right back with you. We've got Bill in Worcester, Massachusetts, and then we've got Gator in the Den. So I'll be right back. Basil Chapman sitting for Larry Pesavento. The future's up.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi folks, we're back, and I'm sitting in for Larry Pesavento. This is Basil Chapman. I'm usually the host of the Tiger Technicians Hour at noon, and my service here is the opening call, the daily newsletter. And we're on right now. We've got Bill in Worcester in Massachusetts. We're talking grains. We're talking about BG, which is Bungie Limited, trading at 69.31. Market's just about to open. The market's open. Dow's up 93 at all-time high. Yep. and the S&P is up 9, almost 10 at 29.33. So I wanted to say, Bill, the only reason why I mentioned the options is that BG has the same look as DBA, which is that has the grains in it. That's the DBA is the Invesco, I'm sorry, DB Agriculture Fund. And whoa, nice big move up here in the DBA. And that weekly chart is really what I'm looking at, a nice leg B. But the reason why I mentioned the options is that I would actually go out to 71.50 where the 200-period moving average is in the weekly chart, because it's starting to build strength. I think at least it's going to go to that particular level. And then I was going to say to you, what you could get an option to do. We're in October. You could get maybe a November option, a call option. But anyway, so the thing is this: it's trading at 69.45. It's about 3 points higher than where you got out of your position. If you were to go in right now, this is a brand new leg E, I'm going to call it for the moment, and if you were going to get in now, I think it can go a little higher, and then I think it starts to chop around a little bit to kind of digest these big gains. I don't think it breaks down at this point. It's got very strong support at 67.15, the 14-period moving average. So for 2 points, it's going to be tough, because the only way I would actually say to you to get back your position is right here at 69.45. I would be inclined, if your analysis is like mine, as I'm looking at the chart, to say I think we've made at least a pretty decent low for this phase, that there should be a rally to continue a little longer. If you got in now in the 69, 30, 69 area on a small position, at least you're there, and you're going to play with it if it goes higher. My guess is that you will have another opportunity below 68.20, 68 maybe, to get in. So I'm inclined to say to you, you are out, you made money, but I would nibble back in just to have this position, so that at least you feel you're participating with the stock if it keeps going higher, knowing that you really wanted to pull back closer to your exit point to do the analysis over again. But I'm thinking somewhere in the mid-67s, that's pretty good support for BG in this particular phase right now. I don't know if that helps you.
Yeah, it does. One quick question. What is that orange yellowish line right below the D and the E? What moving average is that?
That is the 200 period. The orange I always use is the 200 period moving average. And in the weekly chart, that's the one I was talking about, 71.45. It looks very much like it's forming a cup formation, or almost like a V formation. It looks like it's being attracted. If it can get to 69.80, the closer it gets to that 200 period moving average, the more magnetic that average becomes.
Yeah, I'm gonna hang up now. But if you have a quick second and look at, I just saw the date. It was January 18 when this stock got into that Glencore rumor that was put on Bloomberg, and this thing shot up, I think, from 68 to 81.
I remember
in
that.
2 days.
In 2 days, I completely forgot about that. It was huge. But you see, this is what I'm thinking about gold as well, that if it's not fundamental, if it's not based on the earnings potential, and it's a rumor, look what happened. It has this huge spike, this green candle. So this goes A, B, C, C1, C2, then A, B, C, and then it goes to a D right there. And then it just keeps coming down, down, down until it goes back to the 74s. So this, I think, is different. I think this is, I might be wrong, but I think from my eye on the technical basis, this has veracity to say it's building very good support. There's a difference now to when it spiked that other time. And that's the reason why I'm looking at gold so closely. Will this just be a Goldman Sachs play and not a really fundamental thing in gold? And we'll know that within 2 days. So yeah, I'm looking at this, and I think I kind of like the way it gave away from peak D, a sharp move to the downside. And yesterday it has almost an engulfing to the upside. Today it goes further, even though it's in E. I like it very much. I think you've got your eye on a good stock, and it's just how you want to enter it. And as I say, my thinking here is, yeah, take a little bit back right now. That way you're in the game, you really get a feel for what's happening. And if it starts to pull back, that's when you do your analysis to see if you add more to it.
All right. Thank you very much.
Thank you very much, Bill. Bill in Worcester. We're looking at BG, Bungie Core trading at 69.34. Let's go to Gator in the den. Hi, Gator.
Hey, Basil. How are you?
I'm well. How are you?
I'm doing good. Got a quick question for you.
Yes.
The gold you and I have been talking back and forth about. It was my understanding, and maybe I'm wrong on this, that your low cannot be the high.
Correct. Unless it's at D.
Okay. So, for instance, on when we were talking about the 120-minute gold chart,
yes,
you've got your A on lowercase c.
No, I've got another bar. Let me just do this. Let me show folks what you're talking about.
Each one of those bars is about a penny higher than the bar before it.
Okay, give me 1 second. Opening it up. Yeah, so look what I've got. You might be able to see it if you're able to do this simultaneously. Okay, you see this bar that was made in gold, the continuous contract at 4 o'clock yesterday at the close. The low was 1184.3, and the high was 1188.0. The very next bar is 1188.4. I see what you mean, but that's not an and then it goes 5. You're absolutely correct. Wow. Gator, I have to say, let me make this big confession on the air. Gator is the one that always keeps me in touch. He started working on the Chapman wave years ago when we started doing this here at TFNN publicly. And whenever there's a question, I always respect. I'm saying, here comes Gator. I must be wrong somewhere. And he's absolutely right. You can only get a peak. That's really what I didn't realize that's what you meant. You can only get a peak when you've got a lower high bar. And each one of these bars, all the way to this doji candle right here at 2 o'clock on the 28th at 1198.0. The next one is 1196.9, makes a peak. So that's peak A. And this is another peak A. That becomes a combined peak B right there there we go, on 4 o'clock on the 2nd of October at 1198.4. That becomes a peak C. And lo and behold, what do we have? We have a Chapman wave technique called a peak C1. And that's exactly what you were alluding to. 100% correct. And this one's fractionally lower, comes to peak C2. So I put a red plus sign because you can't put a down arrow. That applies only to a peak.
Look at the daily chart, too. I think you did the same thing on the daily chart.
All right. Thank you very much. You want to hold on or are we done?
Be where the B is.
Okay, very good. Thank you. You can hold on. I'll be back.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Everyone, we're back. Basil Chapman sitting in for the one and only Larry Pesavento today. And we've got Mike in Ormond Beach on the line. Mike, how are you?
Pretty good, Basil. Basil, I've been trying to get into the BJO, the coffee ETF. And
That's
the
coffee.
first time
Okay.
I got in on the 20th, and then I got stopped out on the 25th. And then Friday, I saw we started to pull back a little bit, and I had a buy order in around 78, and it never got as low as I needed it to. But anyway, I saw it kind of took off. But I'm wondering, do you think it could go back and test the 50-period exponential and maybe try to get back in at that point?
So we're talking about BJO, right? This is the iPath Serial B, BB Coffee, what a big title that is. Anyway, it's the coffee ETN. And it's trading right now at 41.77. We're talking about the right thing, right?
Yes.
Okay. So I just want to do this. Is KC coffee? I think it is. KC. No, it's not. What is coffee? I put HC. KC. KC. Yeah, there it is. So continuous contract of coffee. Whoa, look at that. This is only in B in the daily chart. You know, these grains, these coffees, all these agricultural areas starting to really pick up some strength. So now, you see, this is always very tough because if you missed your original entry, my rule of thumb, and I have two thumbs, so I don't always stick to the same rule on both thumbs. But I try my best. In a situation like this, and I try it for subscribers as well, because we've missed the perfect entry that we wanted, and sometimes it's just pennies, but you really want to be, if you have a discipline, you want to stick to your discipline. What happens now when it's a point or more above your entry point? And that is really... that's kind of tough because it's in leg C. That portends potential to a D. It is way oversold, but it is also in an area that has been sporadically for the past, months and months. Every time there's been a decent rally, it's just been clobbered. However, this one has gone for the first time way above the weekly 9-period, the pink line, 9-period moving average of 39.93. And at this point, as we're looking at it, way above the 40.73 number, 14-period moving average of the weekly chart. So it's almost the same as we had exactly the same thing when I spoke to Bill in Worcester. We were talking about BG, he was talking about the grains. I'm thinking here that the pullback should be quick. It should be not that sharp, even though it's the second gap up. And it should try for the 42s. But at 42, you've got D, and then you've got to say to yourself, oops, a big move now. What do I do? So I like to look at the left and say, we've gone over the left side peak of the 14th of 41.60 today so far. The next is that gap. I'd actually go for the high of the bar, not the gap. I'd go for the high of the 7th at 42.79. And I'm saying if coffee, my experience, I've not ever traded coffee. Not even, neither the futures or the fund, but I have followed it periodically because whenever I have a chance and I can listen to anyone who discusses the futures, I always look at coffee. And my thinking here is that when coffee changes its trend, it does it viciously, but to keep and sustain its trend, you have to always wait for the big pullback that comes. And if that pullback holds 1/3 to 50% of the gain that you've had, and then it makes a new high, you've got a pretty decent change of trend. So this is in the process of defining that for me. So I'm going to say to you at 41.60, you've got two choices. You can either say, look, I've missed it. I've missed my entry point. Why would I want to chase it now when I was fussing like crazy a point ago? Well, the point being that now it's broken those resistance levels. It's a different kettle of fish. The rudder has changed the trend. It is now moving to the upside in 120-minute chart, daily chart, and even the weekly chart has had a really nice turn. The MACD is very close to turning up. Here's what I'm going to suggest. It's almost the same as I said to Bill. I don't know what your risk reward is. I don't know. I know I've followed you enough times when you've called and your positions. I know that you have the tendency to want to have the longer term, but you are quite prepared to be quick in moves if it doesn't go your way. So I'm going to say to you,
it depends on what I see in the particular thing that I'm trading.
Correct. And if I'm looking now at the agriculturals probably being in play, then coffee is probably one of those that's included. So here's what I'm going to say to you. I'll say the same thing. If you use options, I would go quite further out. I'd get a 42.5 if you can.
Yeah, I normally don't use options, but
okay, so that's one way. What I really am going to say to you is that at 41.60, if you go in, I would not get a full position. I wouldn't get a half position. I'd get a very small position saying even if it extends this leg C and you're in, that's great because it's still got D to come. If it makes a peak C because tomorrow is a lower high bar, it then has D, then you've got to be a little careful. But I must say this is a very impressive move, not because of what happened yesterday. It's what's happening today in this early stage when we are only 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 bars, daily bars from a really serious low in coffee. Let me just put this on the very long term. I want to see if I can get a picture for you. Yeah, if I'm looking at this monthly chart, the candle that was made, I love this. The little doji candle that was made last month, and the way October started, have a look at the little two doji candles of November of 2013, the continuous contract. There again, look at those little doji candles back in March of 2009, and then you had a pretty good move. I must say, I'm beginning to like what I'm seeing here between the two calls that you've made, and then Gator's call going back to the gold chart, because I think gold is in a different area. It's in the metals. You're in the grains. I like it. I'm beginning to think that I would start a position right here. I know that's kind of tough to do, but let me just give you parameters on the short term. BJO. Parameters on the short term. I'm going to go to the 120-minute chart. So that's a peak A, B. I'm doing this quickly. C, D, and this is an E. There should be a little bit of a pullback. Now, either you can wait, or you can say, I know there's going to be a pullback, but at 41.60, I'm prepared to give it, I don't know what you want, I would give it until 40 in this particular move right now as a stop. And I'd say, you know what, I'm going to get a small position here. I'm going to handle this position as if it was the one that I got in down at the 38.70 something where you just missed it. I'm going to try to handle it that way, because if it doesn't come back sharply and it's able to hold above 40.50 all the way through Friday into Monday, I think coffee's made a pretty decent low. I don't know if that helps you, but that's the way I'm looking at it.
Yeah, it's okay. Well, thanks for your analysis, Basil.
Thank you very much for calling, Mike. I hope that helped you. I'll be right back, folks. Basil Chapman sitting for Larry Pesavento.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. So this is Basil Chapman, just about to sign off. And then, of course, you're going to go to Tom and Tommy for the Bull Bear binary option hour. And then there's great programming all day. I'll be back at noon for my regular show. Just sitting in today for Larry. I couldn't make it. And so don't forget, you've got Steve, you've got Dave, you've got Tom. A lot of programming. So if I'm looking at platinum, it's trying to retest that peak that was made on the left side. It's at 837. Very good action. And this is saying to me that we cannot rule out. Now, gold, I discussed gold. I said, I'm just worried that it was a Goldman Sachs kind of, maybe they're getting out of something. I don't know. It isn't giving back anything. It's up 0.03. But it's really the way the dollar acts that that's the part that is going to either impress me or unimpress me. And the dollar right now is up 13 cents, holding really nicely, considering that it came down from almost 97 down to 93.81, trading at 95.61, right in the middle of the range. I like the technicals, they're acting very well. So that to me is a benchmark. I'm looking at it. I'm looking at gold, at the dollar longer term, I think it's going to build strength over a period of time. IWM was very weak for the past couple of days. Today was an opportunity for it to attempt a rally, and lo and behold, it is up a full 14 cents. But giving back the gains that it made earlier on doesn't look good, and I don't like this kind of divergence. Anyway, we're about to wrap up in time. I don't want to be caught in the middle of a conversation here, just other than to go back to that bond chart, if I can, for a moment. That is incredible. If you look at the TNX, that was the 10-year. It's the same with the 30-year. But the 10-year is the one that is broken above the very long-term down channel resistance. It's been there for months, almost all since about January. It's been above the trend line. It looks very much like it wants to go to a leg D. It's very close. Leg D will start in the monthly chart of the yield, the 10-year yield, TNX yield, 31.15. At 31.16, it starts leg D. And we went to 31.10 last month. Let's see what we do this month. Have a wonderful day. Stay tuned for the program, and I hope you come back at noon for my show, noon Eastern time. Have a great day. And,
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.